Welcome back to the JumpifyLabs Podcast, the show for founders who want growth without the guesswork. Here we talk about the systems driving predictable growth, and today's guest lives in a world where most founders don't think about until it's too late, selling the company that they spent years building. Donnie Adams is an M&A advisor who works with founders doing between 5 and 75 million in revenue, helping them exit without blowing up valuation. Donnie, welcome to the show.
Jay, appreciate it. Thanks for having me.
The pleasure's all mine, brother. Let's kick things off. So you went from tech startup founder to M&A advisor. Tell us a little bit about that journey.
Yeah, it's been a journey for sure. I got into tech sales just right out of college, selling software, selling BPO and tools like that for really big companies, and then eventually got the opportunity to lead sales for a tech startup out of London. And so when I got there, I worked directly with the CEO and CTO. And what was so fascinating about that opportunity is my CEO was 30 years old. And I remember just talking to him and my CTO on a daily basis and realized, hey, I think I could do this too. And so I ended up looking for opportunity, and I came across an opportunity called Sifted.ai. And Sifted.ai, we used artificial intelligence to summarize legal documents. And I thought the opportunity was great. And then my co-founder had built it, and he needed me to come in and help kind of get it into some accounts all across the U.S. And so we were able to team up, and we did really well with it.
So you went from your AI company to getting into M&A. How did that transition happen? Did you exit your company?
Yeah. So we weren't able to exit. So the thing about startup founders is startups have a 5-year survival rate. Most startups do, right? And so I think within like the first year, we ran out of money. And at the time, my co-founder, Andrew, didn't want to, he was looking at probably going back to work. Where for me, I was just ready to just do whatever. Because at the time, I just knew like this is what I wanted to do. I didn't want to go back into the corporate world. So I just brainstormed. And in the midst of that brainstorm, I came up with an idea for a show called The Brilliant Ones. And so The Brilliant Ones was a show where I interviewed entrepreneurs and the companies they build. And a part of the guests that I took from that list was the accelerator that I got us into. So this is crazy how all this works, but like I was able to get us into the accelerator in Austin, Texas. Andrew wanted to walk away, but because I was already in the accelerator network that I got us in, I was able to leverage that network to tap into other co-founders. And I was able eventually to start my show, The Brilliant Ones, until I found the next opportunity. And in the midst of that, I met another co-founder who built out this tool called Tournament. He was from Kazakhstan, and he came from Kazakhstan to America, and he was in this accelerator program. And eventually he was like, hey, I got this co-founding opportunity, but he says, I like you a lot. And he raised a couple $100,000 for his startup, but he says, I have more investors willing to give me more money, but I don't want them to invest in startup because I know it's a very hard survival rate. And so I want to invest in you, and I want you to go run an opportunity, and you just tell me what should we invest in. And so I did my homework. And then a part of me doing my homework, I found this program called Acquire that taught you how to buy and sell companies. And so I met with them and then found out that they were ran by private equity guys and guys who worked in investment banking. And they told me about the companies that they were investing in, which were recession-proof businesses. So you think of HVAC, electrical, plumbing. They were investing into these companies, and they were teaching folks who wanted to learn how to do it. So I convinced him and another business partner to go in with me. And so we all went in. They were like, Donnie's going to go run it because they were they were busy running the startups. Donnie's going to go run it, go take lead on it. And then you're going to go find a company for us to buy, and you go run it as a CEO. That was the plan. I go through the program, I find deals, but eventually they become like, they're so busy in the startup world that I'm moving through the program really fast. I had to fly out to Denver to go meet with the CEO of the program. And just, I was advancing through the program. And I had to go and pitch the deals all myself to the point where it was kind of like, we just kind of fell out because I was just moving through the program so fast. And eventually that kind of led me down the opportunity. Well, I can go sell companies to come up with my own cash to go buy my own. And that's kind of where I pivoted to. And so I eventually got out of that to go to a company called Advanced Business Brokers. And that's how I got into selling companies.
What a cool story, man.
Yeah, crazy story.
Yeah, it's cool. I appreciate you being honest about your ups and downs as well. A lot of people won't a lot of people will put a facade like everything they've touched has turned to gold. You just being honest shows really a lot about your character.
Yeah. Yeah. I also had my own company too. I had e-commerce business that was a success. It was Pameo.com, and I was running that as well through the midst of all this. So Pameo.com was an e-commerce business that I built, that I had agreements with wholesalers all throughout like the US, and I was shipping products from like all over the world out of China. So it was like a drop shipping business. And so all home goods. So I had contracts to sell furniture, patio tables, and that did really well.
Yeah. Okay. Cool. Let's talk a little bit about the differences between selling a business versus selling software. Because software is where you kind of grew up, but selling a business, totally different type of sale. I
Yeah.
know from being an M&A advisor myself, but I want to hear your explanation of the differences.
Yeah, I think I always say, people always ask me, say, how you go from selling software to selling companies? Selling companies is actually a lot easier, believe it or not. Selling software is too much complexities. You have so many personas that influence the sales process. You have certain sales methodologies that work on certain sales, certain, like, depending on the type of sale, right? You have the spin selling, you have challengers, and then of course you have medic, which is just a way to qualify the whole entire sales process. And you also have like championing, right? You want to get it inside an account. You have someone to champion the tool and hopefully get it to the teams that you needed to get it to. That way they can spend. Most companies are evaluating multiple softwares at a time, so it's really like a tough process, and you have to navigate that. And the sales cycles take anywhere between 6 to 9 months, especially at the enterprise level. That's difficult. And selling a company to me is a lot easier because all you have to do is really influence one person, and that's the seller, right? Getting the listing is probably the hard part, but once you get the listing, selling the business is so much easier because then we run a certain process that where we can sell the company off, and so and that it has its own complexities, but not near as the complexities that you deal with in software sales, because software sales, it really can vary. Where in M&A, it's me meeting with the CEO, meeting with the owner of the business to kind of understand what they're trying, and they're motivated. They're motivated, whether it's retirement, whether it's health issues, whether it's just spending more time with their family. It's easier to sell them on, hey, I can help you hit your goal, instead of you talking to some Fortune 500 company that's evaluating an ERP. They're like, yeah, but we're also talking to this company. We're also talking to this company, and follow up with us in a couple weeks or a couple months after we do a demo and we look at pricing, and it's not even really like, all right, cool. Versus this, you have to not only do the evaluation. I think the challenging part in M&A is eventually convincing the owner that their company's worth this much, and then hopefully we can get that in the market. And we're my firm, we're very successful at it. And I think that's the thing, is just pushing it, making sure that it's a win-win for everybody. So to me, M&A it's a way easier process. And because you have private equity firms, you have family offices, you have other companies, so strategic financial buyers, all evaluating deals on a regular basis. If I show you my inbox, you'll be like, wow, this many people want deals? I'm like, yes. And now it's just finding a good deal to sell them.
Yeah, for sure. One challenge I find was sellers having this expectation in their mind that their business is this much, but the market is showing that it's worth this much. And then
Yeah.
convincing the seller, like, hey man, your business is not as good as you think it is.
Yeah.
Right. So that hard conversation is one that you have to have, but it can be a little bit challenging because you want to make sure the seller's happy, not exactly pissing him off until you get the listing. All right.
Absolutely.
Yeah. How do you protect founders from coming across bad buyers? Because that's something too. Like sellers, when they're getting ready to exit, a lot of times too, they become not trusting or distrusting of the people they're speaking with. So how do you protect the sellers, from that kind of situation?
Yeah, I always tell my sellers interview them the same way they're going to interview you. And I think that's such a good point, because you have to look at it, right? Buyer's going to come in, ask hundreds of questions, trying to find why the deal might not work. You have to ask the same 100 questions to them, and say, okay, what's your experience with this? How would you handle this challenge? How do you feel about this? How you feel about this? You have to, I think sometimes what we do in our process is protecting the seller to make sure that, hey, we have a valuable asset. So we do a qualification process. So we qualify folks. I'm not afraid to hop on a call and tell a buyer, hey, I don't think this is a good fit for you. Right.
Mhm.
And because of that, you eliminate a lot of people who just want to inquire. They just might want to look at the SIM. They might want to look at financials, and they're not even serious buyers. So it's important to understand their motive behind that. It's understanding what's been your experience level. Is this your first business you own? Okay, you want to go buy a manufacturing company, but do you even have experience in manufacturing? What certifications do you have? What level of expertise do you have taking over a business like this? Because this business has been running 20 plus years, and it's going to continue to run for 20 plus years. But if it goes to the wrong buyer and it loses, it goes right down, then what? So we have a very deep qualification process, and I always tell the seller, do interview them as well. Ask them questions to qualify them. And it protects everybody, and it also avoids wasting people's time, because we all know buyers are there's diamonds and dozens of buyers, and it just makes sure you're finding the right buyer that is serious, that has the expertise, that has the willingness to want to go run this company. It's their most precious asset. I've been running this business 20 years. Some got people 100 years. It's been passed from generation to generation to generation, right? And so giving it to the wrong person is a screwball effect. So I always encourage sellers to just, again, understand the buyer's motive, right? And it's important that they have, sellers team up with someone like myself, M&A advisor, to help that. Because a lot of sellers just get on and try to do it themselves, but that's what I'm here for. I'm here to help you with the process. I'm here not only to qualify the buyer, but I'm also here to making sure that the buyer fits within this business model. And then by the time they get to you, now you're like, okay, this is someone I think can see running the business. And then when we come in and we get all our bids in from the process, then it makes sense to find out which buyer is a better fit. And also, too, especially when it comes down to the negotiating terms and making sure it fits. So I always tell, sellers to hire someone to do that vetting process for you. You're not going to know it all. And it's okay to give up a certain percentage of the sales price, because at least like, hey, I'm getting the business in the right hands instead of me taking on the whole entire process. So it's important to have some sort of advising in that piece to protect you against, buyers who just don't fit the criteria to run the business.
Yeah, I got you. Outside of sellers trying to do it on their own, what's the biggest common mistake that you're finding with sellers before they're getting ready to sell?
Just having your financials in order. I think that is the one thing that I always tell folks is sometimes you can't prevent what's going to happen next week or a month from now, 2 months from now, or whatever. But it's important you have your financials in order, which is cool, which is good. Doing monthly P&Ls, making sure you're up to date on all your taxes, making sure that the balance sheet's all accurate, and just making sure you have everything just simplified so that when you do get ready to sell, it's easy for a QOE team to kind of look through and kind of verify all the assets, the income of the business, and it makes the due diligence process so much simple. But a lot of times it's just a lot of owners, their financials aren't up to date. They don't do monthly P&Ls. And so it makes it very challenging to kind of keep up, especially when you have a buyer that is willing and ready, but the seller doesn't have none of their financials. Now we just delayed another month trying to, get the deal done, but the seller has to still find all the financials, come up with a P&L. And then a lot of times too is the dividing between personal expenses and the business expenses, which we also want to separate too as well. And that can be a bit of a challenge. So I encourage sellers to just keep your business as organized as possible. The better it's organized from a financial standpoint, the better it is to sell. It's so much smoother. So I always appreciate sellers who just have everything in order. They have the monthly P&Ls, they have the balance sheets, they have all the financials tied together, they have the business account, and it's not commingling with the personal account. They're not taking money out the business. It's just like, I'm telling you, man, I've seen some horror stories, but it's just having everything in order, separating the business from their personal expenses is key. So I always just keep your books in order.
That's the dream, right? It's never like that though.
Yeah.
It's hardly ever like that. They usually have the commingling of funds. They're usually not tracking everything. It's usually a bit of a nightmare for the vetting teams. All right. So Donnie, what's next for you this year? 2026. We're young in the year. What's your goals for yourself? For the
my goals this year is to definitely just continue to just help as many sellers as possible, getting deals done, getting deals across the board, just really advising them strategically. And so doing as many deals as possible is my goal. And so continue to do that. And it's coming along. We have a great year. I got a closing this month, so I'm excited about that. So it's a blessing. So, but that's my focus, is just continue to just put my head down and just continue to get deals done.
And what's your strategy for finding more sellers?
My strategy for finding more sellers? Well, the firm I have, we have a good process in place to provide us leads, and so we have all like marketing set up that feeds us leads. So from that point, I'm good. Now it just comes down to finding a seller. I'm in a lot of valuations right now, so I'm in quite a few valuations, evaluating deals, and so now it just comes down to just getting the valuations done and making sure it makes sense for the seller before we put it on the market.
All right. And Donnie, where can people find you if they're interested in having a conversation with an advisor?
Yeah, so if they're interested, they can reach me at dadams@vikingmergers.com.
Yeah, so that's Delta Alpha Mike Sierra. All right, Donnie. Well, I appreciate you coming on and sharing some of your experience with us. If you're listening to this and you're thinking about possibly exiting, no better time to talk with an advisor. I mean, the sooner the better.
Yeah.
Reach out to Donnie and see if there's mutual fit there. And if you like conversations like this, hearing from other people that are pushing the envelope for growth, be sure to tune in to the JumpifyLabs podcast for more. My name is Jay. Thanks so much. Take care.